It is Daybreak Extra on Trust TV. Now, today we have our guest in the studio. We'll be talking about CBN and Forex exchange. The Central Bank of Nigeria has revealed that it will stop the sale of foreign exchange to banks by the end of the year. According to CBN Governor Godwin Emefiele, the decision is in line with the CBN's new commitment to boost the country's foreign reserves through proceeds from non-oil exports. Now, economist Dr. Tefa Abraham joins us in the studio today. Good morning and welcome to the studio.
Good morning. Pleasure to be here.
Okay.
Good morning. Welcome to Daybreak Extra.
Thank you.
All right. So the CBN has decided that it's going to stop dealing Forex with commercial banks, foreign exchange, that is. All right. I don't deal with foreign exchange. I don't have dollars. How does that affect me?
Okay, yeah. Generally, the Central Bank of Nigeria is the apex bank, and it regulates the financial system using commercial banks. So any policy from the Central Bank, the rest of us feel it through the commercial banks. So basically, the commercial bank's job is to intermediate between deficit spending unit and surplus spending unit. You collect from those who want to save and give to those who want to borrow, and then you, in between, the gains you make becomes the bank's way of creating money. Then we also have investors who need foreign exchange to either import or export. You have people who travel for personal travel reasons and for business travel as well. These people also need or require foreign exchange to spend or to exchange for goods and services when they go out. And the commercial banks is the place they go to get this foreign exchange. Over time, if you take a long look at our foreign exchange history, to enable people who need $5,000, smaller amounts, have access to foreign exchange, that's how Bureau de Change was created. But presently, Nigeria's exchange rate is facing a serious economic war from all sides. The exchange rate is not looking nice as the way the central bank wants it to be. So this policy by the central bank is to stop the supply to commercial banks, direct supply of foreign exchange to commercial banks, which is almost like in CBN's context, like a lazy way, a cheap way, an easy way to get that foreign exchange, because whether they want or not, they get that supply. So when they get that supply, it is now up to them to try to find people that need that exchange and to give to them so that they can go about their businesses. And in recent history, the people who are the commercial bank's biggest customers are people who import all manners of things, from T-shirts to online, anything import, even ICUs, all the intensive care units, everything. These are the people that are the biggest demanders for foreign exchange from commercial banks. And the central bank knows that the chunk of demand those people get from the commercial bank, they cannot sustain it, because it means you have too much dollar chasing naira even within the economy. So, but if commercial banks have a way to belt up, to source their own foreign exchange, they themselves will be careful who to give. Now, for someone who don't have a domiciliary account, in the interim, there will be no effect on such a person, because our economy is domestic and it's also external. It is those who deal on the international trade aspect that will affect. But if there's any time that you need to travel, even just across the border to Benin Republic or Ghana or Senegal for any training or capacity building program that your organization is sending you to, you will need a foreign exchange to go and exchange to those people's local currency to spend. So at that point, you begin to get reasons of the amount of money you want, you can't get it. Or if you want it, you have to come in so time. But again, you have the option of going with your card so that you can swipe when you get to that country's economy. But the exchange you pay for it becomes higher, and you are not always sure that you can always get your card can work in those kind of situations. So this is the whole essence of this, just to tidy up the banking space and how they deal with foreign exchange, so that once again we can see how much of the value of the naira we can recover.
So basically, the CBN is trying to put the commercial banks to work.
Yes.
Go out, work for your foreign exchange so that you can be responsible with it.
Certainly.
All right, because right now they feel as if they're getting it easily, so they disperse it anyhow.
Yeah.
Okay, all right.
Because normally, if the commercial banks earn the foreign exchange they have right now in their vault, in their till money, they won't just give it to somebody, because people import for a lot of reasons. People import for makeups, shoes, belts, wristwatch. And commercial bank just gives them this money, $40 million, $100 million for a huge set of imports, from suits to kaftan to anything. But if commercial banks actually understand what they did to get that money, they will become careful and begin to profile investors. Why do you need this money? What do you want it for? No, the kind of business, we are not sure we'll get it back from you. Or your kind of business, you don't need to import because we have that market already in Nigeria. So they become part of the investment intelligence community to help reduce the demand for foreign currencies that is putting pressure on our naira.
Okay, but we actually have a CBN official, come out to say that the CBN isn't stopping, the sale of Forex, that the governor was misunderstood.
Yes, clearly, because the governor gave like a 49-minute speech. This video, voice, everything. The idea is not to tell banks, stop selling Forex. The idea is that banks, that supply of foreign that you get from central bank, by December, not even immediately. They are not stopping it this week or next week. They are just announcing, because the way economic policy works, there's a rational expectation, there's a communication effect. So you announce first so that the market can filter the information. Otherwise, if you announce it overnight to implement the next day, it can lead suddenly to stock market crash. People can begin to sell their shares, and it will lead to panic withdrawal. Massive withdrawal from banks can also lead to financial system instability. Don't forget, part of central bank's objective is to ensure financial system stability. So whatever the central bank is doing, they give usually 6 months ahead, because in macroeconomic modeling, 6 months to 9 months is the period you need for counter-cyclical economic policy to have effect on the economy, including that of rational expectation. So the correct news there, banks will not stop selling Forex. If you want Forex, you still go to banks to get it. But if you want Forex to a certain level quantity, and you want from banks may not be able to give you immediately. They will tell you, spread it over time, come back next week or come back in 1 month, because the amount you have, we can't afford to give you everything you are asking for, because we don't have that amount. And the supply window from the central bank will no longer be as before. So they'll become careful, and that is part of the aim of the policy. Because ultimately, if there's no Nigerian economy, then there's no Nigeria in a way. So anything we do to protect the Nigerian economy, to protect the value of the naira, to enable Nigerians have trust in the naira, is very painful for the central bank to see that people are now saving in hard currency, in foreign currency, more than the naira. That's like losing trust in the naira. And the central bank is part of the wider intelligent community, economic, financial intelligent community, and it will continue to do its best to help us achieve a stronger naira, a stable naira. And through that route, then jobs follow, employment follows, unemployment reduces, inflation also reduces, and the cost of living, the value of our naira also improves, and generally welfare increases as well.
When you say saving more on foreign currency than naira, does that include cryptocurrency as well?
Yeah, ultimately, from basic economics, money is a store of value. So in this context, the naira is a store of value. So I have a car now, I don't want it, I want to sell it. So I sell it to you at a particular amount of naira. You give me that naira, I save it in naira. So now the concept now is that when people get anything money in naira, they don't trust the naira to stay, they don't trust 100,000 to remain 100,000 by November. So they exchange it immediately to dollar, even if it's to $10, it didn't translate. They put it in their DOM account. They know that by the time they pull it out by November, it will be either 12 naira or 13, or it will be that same amount. So that is the confidence that when consumers when it's eroding on the part of consumers, the central bank begins to worry. Now, and of course, certainly that includes even cryptocurrency. But cryptocurrency is a form of digital currency. So you, instead of saving in, and cryptocurrency is not backed by law, it's not regulated. So anybody in cryptocurrency and any form of money that looks like crypto is strictly on a risk that he or she has to take on her own or his own. But the alternative to our own cryptocurrency as a substitute for the cryptocurrency digital form of currency is the e-naira. So that's the option. So you can also save that money or just drop that money in your e-wallet.
Okay.
But again, inflation online is the same with inflation offline.
So it definitely affects the
It
e-naira
definitely
as well.
affects the e-naira, especially when the store of value is declining. That's why even if you keep your money in any form of investment, for example, we all know that land always appreciates. But if for overnight something happens, God forbid, and there's a crash in the demand for land and houses, the price of houses and land will have to fall. Like for example, God forbid, and I pray there's peace as soon as possible in all the states and places where there's insecurity. The cost of house rent in where there's insecurity is cheaper than where there's not, something like that. So the essence ultimately is to protect the value of the naira so that the law of one price can apply. So that if you buy onion for 1 naira in Lagos, you should still be able to buy that same onion in Kano for 1 naira. But where inflation becomes regional and the value of money is beginning to change and value as we move across the 36 state plus FCT, it means our unit of value as a country is being questioned by economic fundamentals. And the central bank, as part of the monetary policy, economic management team on the monetary policy side, will continue to innovate to take away or weed out these sources of insecurity to the naira.
Okay, so well, you touched on this earlier when you said the banks now, the commercial banks now, when they get this, they generate this foreign exchange, they get it elsewhere, they will be able to profile investors. You understand?
Yes.
They'll be able to profile investors, so I'll know who to give and who not to give, right? Yes. So won't that affect a certain class of people? For example, now, we always talk about trying to be self-reliant, doing things on our own. Okay, Dashan and I right now are talking about starting an import business. We're going to start importing Gambian goats. All right? Going to import goats from Gambia so that we can sell them right here in Nigeria. So how will, what happens to me now if I go to the commercial bank and I ask them for foreign exchange because I want to go to Gambia and buy goats, and they say goat selling is really not a serious business that we want you to look into, and then they refuse to give me this money? Then what happens to me? Because that means my business won't take off. Okay,
no. First of all, any form of import business you want to go into,
yes,
is okay within the context of economic philosophy.
Okay.
And above all, we also have the African Continental Free Trade Agreement, okay, that guarantees trade within Africa and the sub-region at least to be free. Okay. And don't forget, just as we want people to come and buy our own goods and products here in Nigeria, that's how they also want us to come and buy their own. So economics, international trade protects both sides. Okay. It just works based on absolute advantage, comparative advantage. That's just how it works. So you want to get what you need elsewhere, and somebody expecting someone else also to get what to buy to come for what you produce. Okay. And in economics, we don't touch consumer choice. Consumer choice is almost supreme. You have the right to buy your wristwatch from Iceland. You have the choice of the cream you rub. You can let it come from the heart of Dubai, the expensive part of Dubai. But the same way, economists also knows that somebody in Dubai can choose to come to Kano and spend 6 months holiday. So once international trade is not free, you begin to experience issues of trade wars. So economics generally thrives on freedom of choice. Okay. So banks will not stop that. Okay. Certainly your investment plan will still go on. But the idea is that you may not be able to get the quantum of foreign exchange that you want all of a sudden overnight. Because the commercial banks now know that if they, let's assume commercial banks are able to raise a particular amount of hard currency in the first week of February or second week of February, and then they have 10 investors coming for that amount of money by the third week of February, they will not give all these investors. They will give the person that we import the things that have been approved by our either Ministry of Foreign trade and industry or central bank or our foreign policy generally. Me that want to import maybe toothpicks and toothpaste, they say, oh, no, you can't get it now. If you can wait in 40 years, you can get it. But we'll prioritize the person going for those goods because there are some lists. There's a list of things we can import and not import. This is the way of just controlling access to foreign exchange. That is a drain on the naira.
Yeah, so the thing is still, what yardstick are they going to use to actually profile these investors? You understand? Okay, fine, you talked about toothpaste. All right, you want to bring in toothpaste. I want to import goats.
Yeah.
All right. So how do they balance these things? And let's assume both of these things that we want to import are on that list that you talked about.
Okay, so the toothpaste goat scenarios, right,
yes.
they are just examples.
Exactly.
But the idea is that there's an investment committee. It's bigger than just a straight answer. But to have access to investment funds, there are some requirements that you must meet. There's a lot of forms you have to fill. You have to meet the criteria. You have to state what you want it for. And then, you know, and based on that regulation that the central bank has handed down to the commercial banks, they know who to give and who not to give. Like, for instance, importation of intermediate goods used to produce other goods will not be frowned at. So, for example, there might even be a scenario whereby two people who want to import, let's say, a particular commodity, one may get, the other may not get. For example, if I'm importing something that is used largely in hospitals and pharmaceuticals, I may get that support. But if I'm importing the same thing to use for domestic reasons, they may not allow because what I'm requesting it for doesn't add up. So bottom line, it's not a straight line decision something, but you just keep trying to ensure. It's like you in the news outlet. You have a lot of information to cover every day, but somehow by your discretion and following domestic and global trend, you just know what to focus on. So the banks will always have people requesting. For example, but there's something that the banks will also want to do. You know, I started earlier by saying banks get from people who save and give to those who want for investment. Banks prefer now to loan money to people with stable jobs. People with whose jobs have address, have a CEO, is registered with CAC, they have FIRS, tax clearance certificate, and all those kind of requirements. So banks, but when banks do that kind of lending, they are doing it for consumer banking, for retail banking. They are giving to consumers. But bank loan for production or to investors has been very weak. They have a large chunk of non-performing loans, if you look at banking assets. So what banks now did was they prefer to give people who come together with address, with assets, with a history, financial history. Those are the guys who collected this money and then started all these quick loan apps and the rest. So it became like a banking model, a financial model for them. 3, 4, 5 guys or 5 ladies came together, pulled out this money, created the app to loan people money, and then they go after these people with high interest rates and in a manner that they cannot survive. So where I'm going with this is that for any innovation from central bank to commercial banks, banks will adapt. So banks will find a way to also adapt to this. Let's just hope, and with that, I'm throwing the caution to say that let's hope that banks will end up borrowing or lending to the type foreign exchange, to the type of investors we have in mind. Because banks are always risk averse. They don't want risks. They are within the banks are in the money market category. Money market is money for short-term loan, 3 months, 9 months, 1 year maximum. Long-term loans, 10, 15, 20 years is for capital market, like the way MTN did, going to sell shares and people subscribe. Banks is quick return. Their financial year is 1 year. In fact, their year don't end the way me and you count year, whether in Gregorian or Islamic calendar. They have their own financial year where they all agree that everything stops December 31st. They're not looking at Islam or Christianity. It's profit. They are profit driven. So banks will innovate. And the caution there is that let's hope that they give the hard-earned foreign exchange to the type of investors we have in mind. And then let's also hope that ultimately they support the type of export that the central bank is hoping that they will support so as to grow non-oil revenue.
Okay, so now it's one thing for Nigeria to export, and it's another thing for, you know, the countries that we're exporting to actually accept our products. Now, experts have actually said that, you know, our products are mostly rejected in some of these countries. How do we expect to, you know, go through that?
Exactly, and it still comes back to our conceptualization of rational choice. In microeconomics, we always assume, regardless of the thinking, that the consumer is rational. Rational means prefers more for less. If he prefers A, he will not prefer B more than A. If he prefers B over C, he will not prefer C over B. It's consistent and transitive. He wants to equate his marginal utility for money with marginal utility from the goods and service that he or she gets. So with this, the consumer in Dubai is the same. And that's why nobody quarrels with money. The consumer in Dubai, the consumer in Saudi, the consumer in Iran, the consumer in US, UK, Nigeria, Lagos, Kano, they are the same. So for the fact that we are all selling our goods and service does not mean that the consumer will go for a substandard product. That's the painful fact. So we must improve. So that narrative you rightly pointed out boils down to the issue of packaging, quality, and standard. We must just do something to enhance the quality of our product. Otherwise, we will not be able to cash out even from the African Continental Free Trade Agreement. We will have a window to increase the supply of our goods to the open market, but the demand for it will be weak. And once the demand for it is weak, it will it will work its way down the value chain. The producer who is in that business will stop producing, meaning he or she will lay off. If he lays off, he will stop paying for the factory he or she has rented. He will not be able to pay taxes, and then ultimately the loan that the central bank or whoever gave to that investor, he or she will not be able to pay back regardless of the moratorium that was extended. And no matter how low the interest rate is, or even if it's on Islamic banking zero interest rate, the profit to make to share or share risks with will not be there to even happen. So you find Jaiz Bank or Taj Bank or anybody pulling out. So banks are the same. So what just happens is that they substitute what they call profit to see how they can be able to cover their losses and operate efficiently. So for any investor, packaging, branding, and keeping with standard is very important. If you go into manufacturing earrings and neck chain today, as a Nigerian, it's a very big market. You have people coming even from US, from Dubai, everywhere to buy. But once people use it and they start having rashes on their neck or where they put their, or where they are using your jewelry, that market starts going down. Because in fact, you even be lucky not to be sued by someone on health ground with the claim that your good is causing cancer or skin rash. So these are the things that standard does. And we have Standard Organization of Nigeria to do that for non-pharmaceuticals. We have NAFDAC to also do that for the pharmaceuticals
I was actually going to ask if there's anything the government agencies can do to
exactly.
Guide
and these are the agencies we are just mentioning. Standard Organization of Nigeria for the non-pharmaceuticals, NAFDAC for the pharmaceuticals and medicals, then Federal Consumer Protection Council to ensure that you and I who buy get value for money. So there are people protecting the investors, there are people protecting the investors. So it's always important that regardless of what happens, we have very good products out there. If you look at the challenge, for instance, initially about, for example, taking the case study from the innocent vehicles, for instance, it's nice to say buy Nigeria, sell Nigeria, consume Nigeria. We all understand it's patriotic to do that. But you've done that, and then 1 week down the line, you realize that the house you bought collapsed, and then you are risking lives and things and the likes. You will not want to continue on that path. So whatever we do, let us keep to standard. Standard is what opens our market what opens our economy to global demand. It's important to ensure that we don't compromise standards if as an investor, so that I can benefit from all this policy mix.
Okay, right now we have very few ports, and these ports are under pressure. Don't you think that opening more ports would help with these exports?
It will really be important, because ports, in fact, 90% of international trade takes place on water, and ports is the major landing spot of anything that comes through maritime trade or international trade. We have wet ports, We still have a wide capacity to invest on the wet ports from Lagos to Port Harcourt to even all the southern states. And then there's need for dry ports as well. Dry port, the way it works is that an investor in Kano, for instance, whose goods arrive in Lagos, does not have to send specific trucks to go and offload from Lagos. The whole cargo for northern Nigeria, for example, can be moved as a cargo straight to Kano dry port. So there's need to invest in dry port, inland ports, as maritime experts we want to call it, so that they will be like, it's just like warehouses.
Yeah.
Maybe we should change these names. It's like you have a big warehouse, for example, in Kano, for example, one major dry port in Kano that can house 1 billion units of goods, which now supplying other smaller warehouses or dry ports in Katsina, in Kaduna, and elsewhere, Jigawa, everywhere like that. They all have their own capacity. For example, if you look at Kaduna Refinery, it has its own production capacity. That for Warri has its own production capacity as well. So it's important to invest in this dry port. It's part of the way of expanding activities on the brown economy. Maritime experts, anything on the sea, they call it blue economy. Dry port is part of the brown economy. We need to expand so that one place will not be choked, and it also reduces the issue of traffic, generally decongest our ports and expand opportunities as well for the economy.
All right, so just on a quick one now. We talked about how we can be able to improve standards, and so that we can improve the standards of the goods that we make here so that we can export to other countries and whatnot. I think, well, from my own perspective, I think when we export more, that means we'll get more foreign exchange, right?
Yes.
And that is the ultimate thing that the CBN is trying to achieve, getting more foreign exchange into the country, and you understand, so that but aren't we doing this, aren't we doing this the wrong way? Shouldn't we start improving the quality of our imports before we say, okay, let's regulate how this foreign exchange actually comes in, or how we distribute this foreign exchange? Because if we improve the quality of our products, that means we improve our exports, that means we'll export more, you understand? Rather than saying, okay, fine, let's regulate how we circulate this foreign currency within our economy.
Okay, don't forget the central bank governor announced that policy just on Thursday, during a meeting with the bankers committee. Now, we are in a situation whereby our refineries are producing nothing. As of 2020, 2021, and presently, nothing. And if we don't sell crude, foreign exchange will not come in. So the crude oil is our major source of foreign exchange, but it's not the major contributor to our GDP. So the central bank is thinking, what can we do to also improve the foreign exchange we get from non-oil sectors, which is what this policy is all about, and giving them a 200 billion target. So the concept is, if you push the banks to innovate by halting the supply of foreign exchange to the banks, they will be able to put in their resource into investment banking to see the type of investors to support and ensure that they improve in terms of their foreign exchange. Banks have a way of doing investors analysis, viable investment analysis. Once for bank to invest in any investor, they have some level of assessment to be sure that this investment will have the expected yield on returns. So the whole idea is just to make banks to wake up and become more active in their investment banking aspect on how to support businesses that can earn foreign exchange on the non-oil aspect. And this policy has been from time immemorial. What the central bank is doing this time that is unique is to halt its own supply by December so that banks can explore that window to innovate. And there will be other incentives as well that the central bank will be giving to commercial banks to encourage them to implement these policies. But the concept will always be this. We have a revenue challenge, and revenue from the oil aspect is volatile. It's exposed to international factors that we cannot control. A tiny shock from Israel, Middle East, Iran can affect oil price. Change in policy from OPEC, change in consumption attitude from the US, or a revolution from Tesla and Russia can just hold the supply of oil, or the demand and supply for oil. So, but in the meantime, crude oil still has a very nice outlook in terms of, if you look at analysis from the US EIA agency and other agencies responsible for predicting crude oil price. So, but for how long are we going to depend on a source of revenue that we cannot control? So the central bank is just taking the battle a bit further, by this time passing the buck to the commercial banks and telling them, for the central bank, commercial banks is their agents. So central bank is telling their agents.
So where is bureau de change in this?
Bureau de change is, in our earlier conceptualization, is for people who need access to foreign exchange for tiny reasons. 1,000, 4,000, 6,000, going for holidays, personal business travel, personal travel allowance, business travel allowance, just so you can get it quickly without the hassles of going through banks. But overnight, bureau de change, they became very big, such that you can even get $10 million from just one guy on the road. They don't look it, but you can get even $40 million from this guy. And they became a bigger stakeholder than even the commercial banks. And they were able to sway, to move the foreign demand for foreign exchange away from the banking system to the streets, to the extent that their own rate is now competing with central banks' rate. That's why they always call it parallel market rate. So to tidy up that environment, the central bank did all those innovations to ensure that it goes back to the official windows. So if you go back to
it's not like they're trying to stifle them.
No, it's just because they are becoming bigger than large. Their operation, it's like house help trying to chance madam. You have to remind her that she is house help. She has a right. House help is not insulting. She will go to school. She has street feeding. And some madams even pay the house help and even take care of their parents. But she just needs to be reminded that there are boundaries.
So it's like a reality check.
It's a reality check, exactly. BDCs can fund some states. Some state budget, they can convert it all to dollar or a hard currency. In fact, they won't tell you which currency we sell. They have even predicted to the extent that those of us who make use of them, they even sway our attention. They can tell you that next week this rate will improve. And before you know, your $40,000, my $10,000, her $1 million, by the time we channel it to a particular investment tunnel, based on what we heard from the Bureau de Change guy, it begins to affect central banks' decisions and expectations. So that's what happened to Bureau de Change. It was just to tame them. And then for the banks now, is to tell them to wake up and contribute. You can't just be getting people's deposits and innovating on digital banking and just lay low like that. You have to also do your best to join the country's battle towards improving revenue on the non-oil aspect. And your first warning signal from central bank to commercial banks is that supply of foreign exchange we give you periodically will no longer come from December. So we are giving you this long time. You can start holding your board meetings to do an investors mapping. You can profile your customers to see who is an investor, who needs support, and banks know all these things. Just by checking how you deposit and withdraw, they can tell your consumption or investment behavior. So through that and more, and also employing new people as well to become staff of the investment component aspect. Because don't forget, as banks move towards the digital space, they are beginning to see that there's no need to even have too much staff. Because after all, it's just about deposit and withdraw. Central bank's policy, in my own opinion, will also help banks to, rather than retrench staff, withdraw staff from dealing with customers directly and put them in the department that I call investment banking department. They go out, look for investors from the smallest to the biggest, to see how you can support their business lines, help them grow, help them become exporters, so that they can also become earners of foreign exchange. And Nexim Bank as well has a role to play in this. Nexim Bank has a way of supporting certain product lines that have huge foreign exchange earning potential. So I hope that this policy from the central bank is done in strong collaboration with Nexim Bank. And in fact, I expect within this week or the next 2 weeks, a serious stakeholders meeting involving commercial banks, Nexim Bank, and investors as well, so that they can be able to rationalize all these policies before the December deadline.
All right. I think you've said it all. Thank you so much
Thank you
for
very
your
much.
perspectives on this and for joining us on Daybreak Extra.